guys, welcome back to another episode of Behind the Facade. I'm your host, Gavin J Gallagher, and on this podcast I explore the mental and emotional game often playing out subconsciously in your mind and in the minds of everyone else in the real estate or property investment market. The key to success in this game is to master your mindset and behavior, to take control of your thoughts, your emotions, and most importantly, your ego. So here we are on episode 17, and in last week's episode 16 I was answering a couple of questions on the impact COVID is having on the office market and any development opportunities that might be out there. And then I also got into a talk on the 16 personalities, also known as the Myers-Briggs indicator type and or type indicator. And that is a really useful thing. A couple of listeners have since contacted me to tell me that they did the test and they found it really useful. So by all means, check that out, guys. You can find the test at 16, the number 16personalities.com, and they have it there. It costs a couple of euro, I'm not sure exactly. So this week I'm going to be talking about alternative funding. And I'm going to go into just something that happened to me during the week, an offer that I received, but also I'm going to be having a conversation with Mr. David Jelly. And David is the founder of a quite new peer-to-peer lending platform called propertybridges.com. Now, this is a website that is active in the Irish market, and it's a place where developers and investors come together. It's like a marketplace. And they can, if you have money to say that you're saving, you can lend it to somebody to get a better interest rate than the banks would be charging. Or if you're a builder or a investor, you can use them to borrow the money, and you can sometimes move a little bit faster maybe than the banks would move or whatever. So I'm going to be getting into that shortly. But first, as always, I give you a little bit of an update. I am currently recording this episode from home because, as most of you who are sort of existing listeners will be aware, I'm expecting, my wife is expecting a baby, and it is literally any moment now. We're kind of expecting it. We're past the 40-week mark, and so it's literally a clock now. Just it could be now, it could be tomorrow, it could be whenever. So I'm trying to get, first of all, I'm staying close to home, but second of all, I am trying to get a couple of episodes in the bag so that I'm not under pressure to put this out on the day that the birth is coming in or something like that. So give you a little bit of an update. Just the Facebook group is currently sitting at 198 members. And by all means, guys, go, and if you know anyone that would be interested in being a part of the Behind the Facade community, put them in touch and or sort of recommend them as a member, and I'll be happy to kind of add them in. And a quick update on my 10,000 burpee challenge that I set myself at the beginning of August. It's day 20 now, the 20th of August, and I am currently at a running total of 7,125 burpees. And I can tell you that it's starting to take a toll. My knees have begun to hurt quite a bit from my shoulders and my knees. So I've actually had to mix up my technique a bit, and I've had to start bending over and keeping my legs as straight as possible, which is having alternative effects on my hamstrings and stuff. So I'm quite looking forward to getting this over with. I have less than 3,000 to go now, which I guess is about 6 days of 500 a day or something like that. I'm hoping I can knock this stuff out pretty soon, because I really do want to finish doing this. It's starting to just hurt too much to kind of continue doing it. So without further ado, I'm going to get into the first part of today's episode, which is a bit of a discussion on alternative funding. And the reason I kind of thought this would be a great segue into the conversation with David is because during the week I actually received an email, and I was offered to come in on some lending for a development project. And this is, you get these kind of offers. If you're out there as an investor, then people come along and they kind of make offers to you of different products and stuff like that. So this one is, I'm not going to go into too many specifics because I want to maintain some confidentiality for the people who sent it to me, but I will give you some ballpark figures. This is a bridging loan of about 5 million, and it is in order. It's been sought by a very reputable developer. and they are looking to buy a site of about 10 million. And the site it's in the region of about 2 acres, and they have full planning permission for something like 300 apartments. And it's so it's a big project, and these guys are at the outset of it. What they've done so far, they're funding about 50% or a little bit more than 50% of the purchase of the land with their own cash, but they need this little bit of extra cash from investors. And they have already organized discussions with investors and different people about a forward sale, but it is not yet agreed. So that is the reason why they're looking for this bridging finance, because if they had the forward sale already agreed, they'd be in perfect position to go off and secure terms with a main bank or something. But because it's not quite finished yet, and perhaps there's a timing issue or whatever, they need to get this organized quicker. So they've managed to get funding terms from several different funders, and they do plan to go back and finalize the terms with these funders when they had the forward sale agreed. And that forward sale is, I mean, who knows how long it would take between solicitors back and forth and things like that. But the term of this loan is going to be 18 months, and it'll pay you 10% per annum interest. And so now, in the event that this forward funding agreement comes in very, very quickly, and who knows how quickly this is possible, but they've basically agreed a minimum payment to the investors of about 6 months of rent, or of interest. So it means that at the very minimum, you're looking at 10%, 5% of your money paid back to you. There's going to be the various legal charges over the site that you would expect there to be. And they've also basically got a agreement that the money will not be paid to these people unless the value of the site comes in at a greater amount than what they're buying it for. And the reason they're able to do that is because it is actually an option that these people are buying. And so the option was negotiated before planning permission was obtained. And because of that, they got it at a better price. And they didn't anticipate getting as many units in their planning permission. So all in all, it's about, I guess it's in the region of 45% loan to value with security in place, and it'll basically give you 2 times your cover. So the market would have to completely collapse, and 50% of the value of this site would have to kind of be knocked before you'd actually suffer a loss. So and then the plan is that you will get your money back via them refinancing with one of the funders that they already have terms from. And what they basically want to do is wait until they have the forward sale in place, and that will mean that once they have the forward sale in place, then the funders that they're talking to will be much more easy to negotiate, I guess, because they actually have an exit plan already worked out. So it just shows you, I thought I'd bring this up specifically because there are so many of you guys listening today that are young, and they're only at the very beginning of their career, and they are looking at, the be or method that I talked about before, where you go and you buy a residential property and you renovate it and then rent it and then refinance it. And it just shows you that the exit via refi is happening up and down the market, from the very smallest deals all the way up to very big deals. And so this was just something I wanted to kind of bring up today as a segue into the discussion that I'm going to have now with David Jelly. David approached me a couple of years ago looking for investment and advice on this idea that he had of creating a peer-to-peer lending platform. And I had already come across it at the time that we met. I wasn't long back from my time living in the UK, and I had come across LendInvest and a couple of other lenders over there that have a similar model. And so I'm very interested to see how he did in the Irish market. And I've been watching David build the company, and I've been meaning to get him on the podcast for a while. So David's only in his 30s, and he became a startup founder recently enough. So I think his journey is going to be very interesting for a number of you guys listening in that are starting out in your career and just wondering, how do people go about it? What are the thoughts and processes that are going through their minds at the time? So without further ado, here is a conversation with Mr. David Jelly, founder of propertybridges.com. So in last week's episode, I said that I would be talking about alternative finance. And true to my word, I have actually done something a little bit better. I brought a friend of mine, David Jelly, who is the founder of Property Bridges. And Property Bridges is a peer-to-peer lending platform for real estate or property investment and development. And welcome, David. It's great to have you on board, and I'm looking forward to today's conversation.
Hi, Gavin. Glad to be here. Thanks for the invite.
Not at all, David. So I was thinking, I mean, obviously you're a prop tech founder and you're a startup. You've gone from startup to now. I saw today that you've funded a project in 5 minutes or something like that, which is very impressive. Before we get into all of that, I thought we'd kick off a little backstory just to give the audience some context. So can you just give us a short kind of overview of your upbringing and school and what does that look like?
Yeah, so I would have grown up in Armagh, the son of a local housing developer in Armagh. So dad sort of started off as a joiner, kind of worked his way up into site foreman, and then I guess when my brother and I were young, he kind of went off on his own and started developing houses on his own. Always a small local operation, but he built very quality homes that he was very proud of. So he always encouraged my brother and I not to get into the family business. So went to school. I went to school in Portadown College, the same school as Rory Best. And then following that, I came down to Dublin. I studied banking and finance in UCD. A BCom, specialising in banking and finance. And then throughout university, my interest really lay in the equity markets, stocks and shares, investments, finance, and that's what I pursued in my career. So left UCD, got a job in banking. I became a derivatives analyst in the FSC for Toronto Dominion Bank. Then the crash happened in 08, 09. And I'm sure you'll remember this, Gavin, but Dublin was a depressing place to be back then.
Wasteland, it would be a good description, yeah.
Yeah, I mean, you couldn't open a newspaper, turn on the radio without doom and gloom. So at that stage, I decided to make the move to London. I mean, I was working in finance anyway, so London was a natural choice for the career. And I really wanted to get into a front office role in banking. So quit a job in Dublin. It was actually a decent job at a reasonable salary, and then I moved to London with no job lined up.
Risky,
yeah,
especially at that time.
It was risky, and it was risky at the time. But I have to say, it was probably one of the best decisions I ever made. So actually, I moved to London, and within a couple of weeks, I had my first job lined up. Now, the only catch was there's no salary.
Oh wow! So you had to kind of prove yourself, and learn on the job.
So this was a proprietary trading role. So there was no salary, and you had to kind of make your own profits.
Commission.
The particular role was you're almost set up to fail almost in that role. But I used it as experience. So I was there for 6 months. Then I got a job as an options trader with a group called Liquid Capital.
I've heard of them, yeah.
Shortly after that, I got a job as an equity trader in Jefferies International. So Jefferies is a mid-tier US investment bank. It's quite reputable, would have a good reputation in the industry. And I got a job there, which was my ideal job, really. Absolutely loved it. So I was there for a couple of years. Unfortunately, it wasn't a great time in the market. So it was only a couple of years there, and then I came back to Dublin. So I moved back to Dublin in 2013, and I started working for a startup called Eagle Alpha. So that was a fintech startup.
Okay, I was curious, yeah.
So they analyze alternative data to get an edge on the equity markets. So worked there for 5 years, got experience what it was like working in a startup environment. Um, so it was great experience for when I went on to set up property bridges. And I guess the genesis of property bridges was really, before I left London, after the financial crisis and with the advent of the internet, you did see peer-to-peer starting to gain traction after the financial crisis. You had Funding Circle in the UK, Lend Invest was then set up a couple of years later. But
Yeah, I've heard of Lend Invest, all right. Yeah.
yeah,
So that was kind of a peer as for, well, that's kind of what you were basing your model on, is it?
exactly. Yeah. So
And just
fun,
for, I mean, so just to roll back a little bit for people who don't know what we're talking about when we say peer-to-peer lending, can you just give us a little overview of the model?
yeah. So peer-to-peer literally means people lending to people. So what you're doing is you're moving away from the traditional model of people going to a bank to get a loan,
Right.
and people are actually lending to each other via an online medium, so an online platform. So it started really with Zopa was the first main kind of commercial platform in the UK, and that allowed people to give individual loans to other people. So the reason why Zopa was set up in the first place was that the founders were very frustrated that when they had their money in the bank, they might have been getting a 2 or 3% interest rate, but then when they got a loan from the bank, they might have been charged 12 or 13%.
Yeah.
They saw a massive margin in the middle. They saw it as very inefficient. So they thought if we set up an online platform, if we take a small margin in the middle, but let people lend to other people, well, then it'll be a much more efficient system. So that's what they did. So if you put your money in deposit with Zopa, you might have been getting 5 or 6%. And if you took a loan from Zopa, you might have been borrowing it at 8 or 9%. So that was the first kind of commercial peer-to-peer model that was set up. Then it
So
evolved. It evolved further then into Funding Circle. So they would have lent. They would have given small to medium-sized businesses just an unsecured business loan, and then it evolved further into property. Then, so Lend Invest was the pioneer really in the UK.
yeah.
They
And
would have lent for property development, and then they would have taken security
so you're
on.
like a marketplace where you take both sides and you bring them together basically, and then you charge a margin on. So if somebody comes to you and says, I'd like to earn 8% on my money. So I've got 100,000 sitting in the bank and I'm getting less than 1%, or I'm getting, in some cases, people are actually getting negative interest rates at the moment. You can say to them, I can give you 8%. And at the same time, a developer like me can come in and say, I need 100,000 loan. What can you give it to me at 12% or something like that?
Yeah, that's exactly right. So a small to medium sized developer will come to us. They'll ask for let's say a loan for 500,000. So we'll do an assessment on that. Then if we approve that loan, well then we would take a first charge security on that loan, and then we will put it up on our platform for our investors to invest in. So typically, the investor might be getting 8%, and then Property Bridges will get an arrangement fee for that.
Right.
So as you say, the rate to the borrower might be 11, 12%, and then the rate to the investor is going to be 8%.
Okay. So you get an arrangement fee, but you get some of that gap in between, do you, as a percentage, or is that, am I wrong?
Typically not. Typically
Okay.
not. Yeah.
Interesting. Wow. Okay. I mean, I can see, and so from the point of view of speaking, like a lot of our audience are wannabe property investors. Maybe they haven't made their first move. Why would why would property bridges be a better choice than say a traditional bank?
Well, in terms of investing in, um,
Well, I suppose this is the great thing about being a marketplace is you've got the two sides. I'm thinking from the point of view of being a developer. Why would I find it easier to go to you and get money from you rather than going to a traditional bank? Can you move quicker, do you think?
Yes, the main advantage we have is we'd move a lot quicker than the bank. But I think even more than that, since the global financial crisis and since the property bubble burst in Ireland, the banks really have a lack of appetite to lend for small to medium sized development. So the banks might have a minimum threshold.
I
So
get
they
you.
might only lend on a €5 million loan, and they might only lend in the Greater Dublin area. So it's really to do with the banks both have a lack of appetite and it can be slow to deal with.
I can speak to that. Right, yeah. And they also require, additional legal team to be involved to review the documentation and all this, and it can
Correct.
be a real nightmare to kind of
Yeah, and
get.
there's different departments in the bank. So we're a small team. We're focused on purely property and property development. So it's much more streamlined process. We're not really saying that we're better than the bank or our model's better. We're just saying our model's different. So the property market is a massive market. There's loads of different segments to the market. And yes, we think bank funding is certainly a good route to go down for larger developers. We just think for some of the smaller developments or some of the developments that the bank might not have an appetite for, we think that our model is very suitable for that.
Yeah, it sounds like a great product market fit. And then on the other side of it is that, if you go and put your money on deposit in the bank, you're earning almost no interest at all. Whereas you guys, 8% is actually a very reasonable figure. It's like 10 times basically what you'll earn from almost any bank that's out there at the moment in this market.
Yeah, it's we think it's more than reasonable.
Yeah,
Yeah, as you say, I mean, if your money's in the bank at the minute, you're getting 0%. So even if you look at it from an investor's point of view, you've got a number of different options out there. So you can invest in stocks and shares, you can invest in a REIT, or you can invest in property bridges, or you can invest in a buy-to-let property. Thing about stocks and shares is we would always advocate having a balanced portfolio
of course. Yeah.
to diversify. So we think you should have some of your money in stocks and shares, and then some of your money in property. But it's how you get access to that property. So it can be difficult for some people to access the property market. I mean, the traditional way is to own a buy-to-let property, but not everyone can do that. I mean, I don't have the capital to go and buy a buy-to-let property. Even if you do have the capital for that, the buy-to-let properties can take an awful lot of management, and it's an awful lot of risk because you're getting a mortgage, you're getting leveraged up on one particular property. What Property Bridges does is it lets people invest in the property market from €500. It's it's low hassle. So you'd go onto the website, you would do your own research on the different offerings we have,
But
and
you've
then
already vetted them, I guess. Yeah.
yeah. So we would vet the properties, we would write a credit paper, and we would publish all that information online. So it's very transparent. And we would have a number of different types of offerings as well, with different maturities. So I mean, the one we had up this week was for 6 months. It was a social housing development. Others might be 18 months or 24 months. So it really, we're giving investors a bit more choice as
Yeah.
well.
So if somebody wants to put their money away for 6 months and no more than 6 months, that's an option for them. Whereas 18 months, somebody might be thinking, oh, I might want my money back before that period is up. So you've given them the both choices, I guess.
Yeah, correct.
Interesting. Yeah.
Um, so I mean, our investments wouldn't be as liquid as a stock, let's say. I mean, you can buy a stock today and you can sell it tomorrow. Our loans would be a fixed term and a fixed rate.
So you're locked in for a period of time. Yeah.
Yeah, yeah.
Going back to your time in Eagle Alpha, which was a fintech, did you pick up any? I mean, did that influence your decision to go and start your own business? Yeah, being in there and in that environment. or did you always wanted to start your own business?
I think I always wanted to start my own business, but I don't think I could have ever done it without my time in Legal Alpha. I mean, I learned a lot in terms of just being the environment I was in beforehand was, it was a large multinational. There was a lot of structure to the role. Your role was predefined. It was very, very narrow in nature. When you work for a startup, you literally have to do everything, and then there's different dynamics as well, and it's a different environment that it has positives and negatives. I mean, there's nowhere
It's
near
not
as
for everyone, for sure.
yeah, there's nowhere near as much job security, but in terms of there's a lot more satisfaction whenever the company does well and it grows.
Yeah, because you're part of a small team that kind of everyone shares in the benefits.
And your input really makes a difference
Mm.
in a startup.
And so tell me this, I mean, obviously going out, starting your own business, that's a risky endeavor, but was there a particular trigger moment or was this something you were planning on for a period of time?
I was planning it for a while. I mean, I saw the gap. I really saw the gap in the market really for funding for small to medium sized developers. Gavin, you probably know yourself. I mean, it was very hard for small to medium sized developers to get finance at all.
Yeah, no, I can remember the options were pretty slim and you had these places. I mean, there's that group Lotus, I think they're called that.
Yeah.
And that's more of a mezzanine finance type kind of offering where you're paying kind of 15 or 18% interest, but you might have a bank loan in the middle there. So you've got essentially you're taking out two different loans, one with the traditional bank and one with mezzanine. With you guys, you replace those two with just you basically do the entire. Is that correct?
Yeah. So we would all our loans to date have been first charge, meaning that like we lend up to 70% of the value of the asset, and
70, right? Okay.
we'll take first charge security on that. And that's how we've operated. Will we get into mezzanine debt as we progress? We might. It's an option we might consider.
I suppose it depends on the market. If you're making good money where you are, why would you take that extra gamble in a
Yeah,
sense? Yeah.
yeah, and we have to really see where the demand in the market is. Like if rates go down, and we're giving our peer-to-peer lenders 6% instead of 8%, maybe some peer-to-peer lenders would like to go in on second charge at 10%. But we need to be careful. There will be regulation coming into peer-to-peer lending, so we have to make sure that the retail lenders fully understand the risks involved with second charge lending.
Yeah, of course. Interesting. So, starting your firm is obviously a challenging time. Can you describe the first 6 months? I think you and I had a chat when you were right at that early stage, and you had
Trying to
only
get
just
trying to get you to invest.
yeah, yeah. I was juggling a couple of my own issues at the time, but you can you describe that period when you actually took the jump? Like, what was your first couple of months? Like what were the priorities that you had when you decided to kind of jump in and start?
So it first of all it wasn't easy. It was very difficult. So I'll just bring you through from the very start. So I if anyone doesn't really know the startup ecosystem in Ireland, I might just give you a quick overview. So there's a lot of supports out there for founders. In fairness to Enterprise Ireland and the government, there's a lot of good supports out there for budding entrepreneurs. And I guess the first place that I started, and I would advise people to start, is the local enterprise office. So there's a number of different grants that you can get from the local enterprise office. One being the feasibility study. So the feasibility study gives you a €10,000 match funding to kind of get your idea off the ground. So I went for that.
So does
Uh,
that mean that you took 10,000 of your own savings and put it to their 10,000, and that was your feasibility budget, I guess?
Correct. So I had this idea for the peer to peer platform. I don't know, maybe 2015. But everyone has an idea, right? So
Execution is a different
when you
thing, yeah.
yeah, when you go to Enterprise Ireland or the NDRC, and you've got a vision. Some people don't really take it that seriously. If you haven't actually taken action to that point, it's hard to be taken seriously. So then I went to get the feasibility grant to build the platform. And then when I had the platform, even a minimum viable product, at least you've got something.
Just from the point of view, there are some listeners here who aren't Irish based. And so just to explain, Enterprise Ireland is a state body that provides finance for startup enterprises and stuff. So if you go in to Enterprise Ireland, you can get, isn't it up to 50,000? You can get 50,000 as a kind of a startup grant, basically.
Is the 50,000 the competitive start fund? The feasibility grant, and then there's other supports as well, and I'll go through that because I've kind of went right through the journey with the Enterprise Office, NDRC, and then Enterprise Ireland. So I went for the feasibility grant, and I was knocked back on 2 occasions.
So twice they turned you down.
Yeah, yeah.
Tenacious chap that you are.
So then I was literally about to give up, and then they give me a call. I distinctly remember it, but there must have been shortened applications the following month.
So just, I mean, they on what basis did they turn you down? I mean, they thought that that your idea was too kind of undercooked to kind of take to feasibility, or what would be the reason that they gave you for turning you down?
At the time, I can't even remember. I can't even remember why they turned me down. Yeah, I'm not sure.
Okay.
It must have been something silly for me not to remember, because like they've got a quota. You've got to remember as well. Like these agencies will have a quota. They've got so much money to give out on an annual basis and a monthly basis, and they're probably going to pick the top 10 projects. So maybe I was just coming in as not
The
in the
wrong month.
yeah. So then, like a month later, they gave me a phone call saying, we've still got your application on file. Do you want to apply again this month? I said I would. So that they just must have been short that month.
Yeah, that's what it sounds like. All right, yeah. And
Yeah.
then you mentioned NDRC. For people who don't know what that is, that's the
So they're an accelerator program that's part funded by Enterprise Ireland. So it's a
okay.
3-month business accelerator. So I went through the feasibility study. So I put in 10,000. The local enterprise office matched me with 10,000. So I went off and built a peer-to-peer platform, which then I used that to apply to the NDRC. Now the NDRC knocked me back on the first occasion. So again, I had to think of different ways. So you have to understand what each different entity is looking for. So the local enterprise office is probably more community based, or wants a business that's sustainable and meaningful to the community. Then the NDRC wants something scalable. So they want a digital business that can scale. And then Enterprise Ireland will want a number of things, but the two core things Enterprise Ireland wants is they want you to be able to employ people, and they want you to export as well. So you have to learn what each different entity wants, and then you have to adjust your application accordingly. Obviously, can't be fabricating a new application, but you have to adjust it to their touch points. So the NDRC, I got rejected from their program, which was their Dublin program, and I noticed 2 weeks later that they had a Waterford program.
Oh, okay.
So I applied to the Waterford program. Obviously, it must have been less competitive because they let me in. And then that was a 3-month business accelerator. So I relocated to Waterford for 3 months to go on this accelerator.
What kind of stuff do you learn on an accelerator?
So the
Was it
first,
was it
the
helpful?
first, yeah, the first half of the course is really understanding, your product market fit, doing your market research, going out to different market participants, and then the second half is investor readiness. So it's all about how to pitch to investors, how to market your product, how to raise money. But then in between that, they would have different consultants and experts that would come in and help you with various aspects of the business. So you might have a marketing expert that's going to come in and will do a one-on-one with you. You might have someone on UX that's going to help you with your website, and then someone that's going to help you with your financial projections on accounting. I have to say, like, it was a very valuable course for me in my stage of progression at that
Did
time.
you say it's funded? So are you getting paid?
So it's part funded by Enterprise Ireland, and then there's other VCs and different private funders in there. So I got 50,000 for 8% of the company.
Okay, so you
So
gave up
that
8%, but you got 50,000. What did you use the 50,000 for?
so some of that money goes to pay for the program. So then that whenever I got the NDRC, I mean that really enabled me to help quit my job and then really go after it. So that was used to first for living costs. I had to take a small wage out of that. Then to turn the platform into from a minimal viable product into a functioning platform, and then really to launch the business too. The 30, 40 grand that I used, I mean, it doesn't really go that far. I stretched it. I certainly stretched that funding. So shortly after coming out of the NDRC, then I met my first angel investor then.
Explain to us what that's like. How did you find them, first of all? Were you going to those kind of meetups and things like that?
So the meetups are great. So I did start going to a few meetups around that time, but I actually met him. He actually heard about me through the NDRC. I think one of his friends had maybe heard about Property Bridges and sent him the details. And then he got in touch. I mean, his name is Mark Rafferty. He set up GoCar, and he was one of the co-founders of Linked Finance.
Okay, GoCar, just for people who are listening in, there's these are businesses around the world where you can walk up to a car and use your phone to basically unlock it, and you can then drive the car and you pay a certain amount. I know there's different names for them around the world, but I've seen them. I used them when I was living in London.
Zipcar in London.
Zipcar, that's it. And I think they're in the US as well. I think Zipcar is in New York City too. So this guy Mark basically set up the Irish version, which is called GoCar.
Yeah.
So he's a founder, he's a startup entrepreneur, he's got good experience in the whole process. So that's a great kind of guy to have on board as an investor.
Yeah, no, he was exceptional. So he was a co-founder of Linked Finance. Obviously, Linked Finance is the premier peer-to-peer company in Ireland. So whenever he first reached out, obviously I was a little bit wary, yeah, wary in case.
Letting the competition in the door.
Yeah, yeah. But I met him for a coffee. We got on great. And then he brought me in to meet one of the other founders of Linked Finance. So I went in there with my business partner at the time. We went in, we pitched to them. And then shortly after that, Mark made me an offer to invest in the company. And so Mark does what, no one else has done to this date. He wrote 10 bullet points on a page. He gave me a check and we shook hands, and, there was no.
That simple.
Yeah, there was no let's get a lawyer to draft up a formal term sheet. It was just so
He
Mark,
keeps it pretty
Mark,
simple.
Mark, yeah, Mark was great, and then he really helped us launch the business. So he would have organised our launch event. He would have done all our PR and marketing in the early days.
I was at your launch event. That was in the Conrad, wasn't it?
In the Conrad, yeah.
Yeah, I remember that. Yeah.
Yeah, yeah. So he was really great getting the business off the ground. And then more recently, he's just taken a back seat just because
he's done all the hard work.
Yeah, yeah. So that was how we launched the business.
Sorry. I was going to actually just ask you, given Mark's involvement and the fact that he was so kind of instrumental in that part of it, would you say that there are any habits or behaviors or anything in particular that Mark brings that you found very valuable and that you learned from?
He just had relentless energy. He was a doer. So
takes action.
Yeah, and he forces you to do things when you think you're not ready.
Pushes you out of your comfort zone.
So I didn't think we were ready for the launch party at all. I thought we needed more time, more marketing material. We needed to put more time into the launch. And he was like, no, we just got to do it. And he was right.
Yeah, it's amazing, isn't it, what they say? They say that an entrepreneur is a guy who pushes the airplane off the cliff and then builds it on the way down.
Yeah.
Push a lot of parts off the edge of the cliff and then build a plane as you're falling to the ground, basically.
Yeah, when the pressure's on.
Yeah, you have no choice but to succeed in that situation.
So those are the attributes I would say that the Mark had, and obviously they've served him well because he's a prolific entrepreneur.
And it does sound like, I mean, it's something that, whereas obviously you got to bring a certain amount of caution to it. You also have to take action. There's a point where you've got to push the go button, and you've got to actually get off your ass. And it's easy to kind of sit back and what I call paralysis by analysis. And you sit there and you keep analyzing the deal and you keep analyzing the deal, but somebody like Mark comes along and just says, no, that's it. Come on, let's just go. We're ready. And you could sit back and you could think, no, we're not ready yet. I still need to do more of this. What you're really doing is kind of procrastinating, even
Yeah,
though you think that you're coming up with these excuses because you don't really feel ready, rather than that you haven't fully investigated the market.
yeah, that's right. There's certainly an element of that, and you're never going to get everything perfect on your first attempt. Like you
Yeah.
have to go to the market, you have to get feedback, then you have to make adjustments, and like
And
we're always improving our processes, our website, our flows.
it's
Like
a constant, yeah,
yeah,
it's constant work. And I know that, I can't remember who it said, but somebody in the technology sector said that if you're not embarrassed by your first iteration of your product, then you waited too long, basically.
yeah,
And so it's, you really do have to kind of push out there and do it. And it's only when it's out there in the real world that you get the feedback on how you can improve it.
yeah. Now it does. Like you have to be conscious of what sector you're into. I mean, we're in the sector of investments. So, in terms of regulation and protecting and securing the investments, all of the groundwork and foundations has to be rock solid for that.
Of course, yeah.
We're talking about, the platform and the marketing and things like that.
And so tell us, I mean, in terms of the trends that you're seeing at the moment, you've got, how many deals have you funded at this stage?
So we've launched our 23rd offering. So we've raised
23.
about 8 million to date through the platform. 23 offerings. We've got just under 3,000 lenders on the platform now. So
So what's
uh,
your average, what is there an average amount that people lend?
it's around 5,000 will be
Okay,
around.
so
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 people
5,000 is your average. Okay, that's
so
interesting.
people can invest from 500, but it's you're going to have some people coming in 500, 1,000, but you're always going to get a number of investors are going to put in 20, 50. So the average investment's around five.
Right, okay. And then what's the largest somebody has backed a project on?
For an individual investor, we've had 150,000.
Right, okay.
And
Interesting.
then we started off pure peer to peer, pure retail investors. Like we weren't back. Like typically, you won't get that. Like typically, a platform like us will have to have some kind of institutional funder behind them. But we couldn't get that. We just weren't well connected enough. So we actually launched the platform really on a leap of faith.
On the strength of your founders, basically, and your investors.
Yeah, on
So,
our marketing, and we managed to get the first project away. We were raising 265,000. We're lucky to get that away. And then we've just worked and built up. Like this week, as you mentioned, we raised 200,000 there in 5 minutes.
that's amazing. Yeah, the progress. And so you were saying that, so you have an institutional backer now. That's, you
Yeah,
have one of
so
the main banks.
yeah, correct. So after we built up a track record, Lagan Investments, company from Belfast, they invested in the company, and then they also invest in some of our loans as well.
Right. And but do you have any of the mainstream banks on board? So it's like a large company basically providing the backstop that you need.
Correct, yes. It's a large family office. We also talk with another family office in London and a hedge fund out of London. We would love to speak to, and we've tried to set up, meetings with the domestic banks and some of the family offices in Ireland as well. We've some conversations going on, but as yet we've nothing. We've no solid relationship there.
So the process, you started up in 2018, was it? When did the actual
It
company?
was October 2018. We first raised money in November 2018.
And so the 3 months in the accelerator and all that, that was when was that in
That was
2017?
that was April 2018. So I
Okay.
came out of the accelerator in the summer of 2018.
So July 2018. And when did you find Mark straight away?
I think it was September time.
So you had a couple of months going around knocking on doors and meeting people, and he was the first person to kind of say, enough talk, here's some money and let's get on with it, kind of thing. That must have been a relief when you got that moment.
It was a massive relief because at that stage, I mean, it essentially burned through most of the money from the NDRC. I don't think, I mean, it would have been very, very difficult to launch it without Mark
Mm.
at that stage.
And tell me this. This is some of the more difficult stuff, because I assume a lot of our listeners have got ideas to start businesses and things like that. And you're there, you're going through your capital that you've got from this Enterprise Ireland, and you're starting to kind of get lower and lower and lower in the bank. And was there moments when you kind of started questioning whether this was going to work, and were you going to have to kind of fold up the tent at some stage? Did you have a date in the future when you weren't going to be able to go any further?
There's, I think there's a number of things that it's in the very back of your mind. You try not to think about it. You just try and stay positive and think of everything you can do to raise money. And they get more desperate
Yeah, that's something I've talked
as
about
time
before.
goes
Yeah.
on. But you never know. I mean, whenever Mark first reached out, I thought maybe he's trying to get some market intelligence for linked finance, and maybe they're thinking about property. And so I was kind of wary when I met him. So you just never know. You have to meet everyone, and I think the expression is you have to kiss a lot of frogs.
Well, I
Uh,
think you were, I mean, to be honest, if I was in the same shoes, I would have been wary of Mark as well, given his background. And so I think you were very right to be concerned. But then again, if you hadn't gone ahead and met him, you wouldn't have landed him. So it just shows that you do have to take these kind of risks. And obviously, when you're talking to somebody, you're not giving them every bit of information that would allow them to, step in and damage your business if that was what their ultimate objective was.
yeah, yeah, that's right. That's right. You have to keep a few cards close to your chest.
And tell us, in terms of meeting investors. I mean, there's a lot of people here listening who haven't gone to that stage yet. But when you were going through those couple of months of meeting investors, and what was the preparation like? I mean, were you constantly adapting your story or your pitch based on the previous meeting, and you were constantly refining it and improving? How much preparation went into each meeting with an investor?
You're constantly adapting and improving, and you're even adapting for depending on the investor as well. I mean, it's not my approach. Certainly wasn't a blanket approach. It was very specific, and I knew the type of business I had. I had to try and find a strategic investor, so someone that maybe had made some money through property,
Mm.
or someone that had an interest in the property market. I mean, we weren't a purely online business. There was a very real part of our business, which was going out, sourcing loans, sourcing developments, and raising money. So we had to be very strategic, or sorry, I had to be very strategic. And
So
yeah,
yeah, deal flow for you is actually getting the projects initially anyway. I mean, I guess now that you've got a name for yourself, people are coming to you to fund the projects.
yeah, that's right. I mean, it has got easier, but I mean, even this time last year, I mean, we were having difficulty, sourcing the deals and trying to get our name out there. I mean, this time last year it was just a two-man band really, or three-man with Mark. But now it is a bit easier to source the deals now. It certainly
Well,
is.
the fact, I mean, when I saw the email today from your team, and it says that you funded this project in 5 minutes, that to me is your biggest calling card, because one of the biggest problems that I would have with, you see a deal, you want to do a deal, And then you've got this process of going and sitting down with a traditional bank, and it might take you weeks and weeks of meeting them and looking for dates in their diary and this and that, and then going off and ticking all the boxes. Whereas if you're able to fund something in the space of 5 minutes, then you are suddenly very attractive to me as an option, because I'm thinking to myself, this is not something that I'm going to be sitting around waiting for an answer for a long time. If it makes sense to you, and if you do a credit paper that stacks up, and if we tick all the boxes, I can have the money pretty quickly. Now the only thing is obviously the 30% has to come from, if I'm going to you and I want to borrow some money from you, I need to have 30% of my own money to put down into the deal, basically. Yeah.
Yeah, so you need to put down 30% equity.
That's fascinating. Well, David, I've got a couple of final questions that I thought I'd pop in front of you. First one is the best advice that you ever got.
I think I'll maybe narrow that down a bit and bring it back to if you're starting your company and you're trying to raise funding. I mean, Mark would give me the advice that you shouldn't just be taking funding for funding's sake, and you should try and find someone that's going to help progress the business, or can
Strategic.
can offer you something more than the funding itself. As a startup, you're always competing for credibility. And I think Glagan and their brand name gave us that. And then they gave us so much more on top of the money that they put in the business that would have brought so much more to the equation.
Yeah, that's great advice. And tell us, books, podcasts, or other resources that you would recommend to the audience. Do you have any particular favorites?
For a business book, I love Shoe Dog.
Oh yeah, by the Nike founder. Yeah.
Phil Knight. It's a brilliant book because it just tells a story of Nike perfectly, and it just tells you Nike might not even have existed if I don't want to spoil the book, but if their main supplier hadn't have looked for a different distributor in the States, Nike almost turned like a huge risk into the making of the company. I just find it a brilliant story.
Yeah, no, I've actually got that on my bookshelf. It's a great book, and there's a couple of great books out there, all right, and get a lot of inspiration from reading books from guys that have done it in the past, biographies and things like that.
And then podcast and Business Wars is a great.
Oh yeah, I've seen actually Business Wars, yeah. And then final question, just making an impact on the world. Fast forward 25 years, what kind of legacy have you left behind in terms of your business and your career and your life?
That's a very deep question, but I guess one of the main reasons for setting up the business is that you can make a contribution to society, and I think entrepreneurs in this day and age aren't just all about the money. I think there's a social good involved. And whenever I set up the business, there was a chronic housing shortage in Ireland. There still is. There still will be for years and years to come. So I hope that property bridges will be able to, in some way, alleviate that crisis. We're not going to solve it overnight. We're not going to solve it, certainly not on our own. There has to be a number of different parties and political will and everything else involved, but we hope we can alleviate that in some way. But we also hope that we can give the average retail investor a fair crack at the market and earning a decent return.
So it's a great thing. Yeah,
we're just giving people a chance to have a stake in their own community. So if you see a property development and property bridges that's in your county or in your local area that you want to fund, well, then you've got the opportunity to fund that. So you'll have a stake in that, property investment, and you'll be able to regenerate or develop an area that's close to you. So that's really what we're trying to do. So by no means changing the world, but trying to make trying to do our little bit to make Ireland a little bit better.
Well, on that, David, it's been great talking to you. Thanks very much. And wishing you guys in propertybridges.com the best of luck. If somebody wanted to reach out to you, what's the best way to connect with you?
LinkedIn. Yeah.
David Jelly. Great stuff. All right, David, thanks very much. And good luck.
Perfect. Thanks, Gavin.
So that's it for episode 17 of Behind the Facade. Thank you so much for listening. You will find web links to the various things discussed today in the show notes. If you found this episode useful, I'd be very grateful if you'd share it with a friend or colleague who you think might get some value from it. Alternatively, if you get a moment, please consider leaving a review over on iTunes or whichever platform you're listening to. This really helps me get the podcast up the rankings and gets it noticed and things like that. If you have a question or topic you would like me to cover in future episodes, please join the Facebook group Behind the Facade Community, where you can get access to exclusive content and my weekly live videos where I offer advice and guidance and stuff. Lastly, if you want to connect with me more or learn more about me, you should sign up to my newsletter over on gavinjgallagher.com/go, or you can subscribe to my YouTube channel, PropTech TV, where most of my content gets sent, or you can do both. So until next week, guys, have a great week and speak to you soon.